we're also focused on keeping energy and oil flowing to the world. And I will not allow a terrorist regime to hold the world hostage and attempt to stop the globe's oil supply. In the long run, oil supplies will be dramatically more secure without the threat of Iranian ships, drones, missiles, nuclear menace, or anything. I knew oil prices would go up if I did this, and they've gone up probably less than I thought they'd go up.
President Trump says the Iran conflict could be over very soon, and he's considering taking over the Strait of Hormuz, calming markets and sending the price of oil below $90 a barrel. Welcome to the Big Money, second hour of the Big Money Show. This is the second hour. I'm Brenberg, along with my outstanding co-hosts. And with us for the hour, Michael Lee, strategy founder, Michael Lee. Welcome, sir. Good to see you.
Hello.
All right, the White House is moving to keep oil prices down as our military confronts Iran. Trump administration is offering insurance for tankers, considering military escorts, waiving some oil sanctions, and discussing releases from the Strategic Petroleum Reserve. But Energy Secretary Chris Wright says bringing peace to the Middle East is the best way to bring down prices.
The United States does not have a shortage of oil. We don't have any increase in our prices of natural gas, but we do have our gasoline and our diesel and our jet fuel prices up. That hurts American citizens, consumers. We are doing everything we can to alleviate that. The single biggest thing we can do is completely dismantle Iran's ability to project hostile force against its neighbors in the Middle Eastern energy system.
Okay, Michael Lee, you've been watching this wild ride in the markets, particularly on oil. What are markets telling us about the situation with Iran and the prospects for oil in the coming year?
So I think, like, you take a step back and you listen to what President Trump has said, like, this is going to be over very soon. We have a good handle on the situation. And the president does tend to be hyperbolic in certain situations. But you're fighting a war that's not really a fair fight in any way, shape, or form. And it's not just about the size of our military or the power of our ammunition. And, like, it's, they say amateurs talk strategy, professionals talk logistics. And much of winning a war is putting all the puzzle pieces together simultaneously to move pieces around the chessboard. The U.S. is a secret weapon to allow us to kind of defeat anybody in real time, and that's Palantir's Maven. And the Maven software is beyond comprehension in how well it can organize on the battlefield. So when the president says this is going to be over in short order, it's probably going to be over in short order. And so when you look at it from that standpoint, that this conflict is likely to be close to a resolution in a matter of weeks, not months or years, like the last few Middle Eastern conflicts, it becomes, well, then what? Right? And the market right now is saying, hey, somewhere in the 80s, I think we potentially get into the 70s. I don't know that we get back down to the 60s where we were, and I don't know if that's...
Why is that? If the conflict is as definitively finished as you're saying and as quickly, why not by later in the year would you not be?
Well, it's not like a corporate takeover where it's like you're doing a job one day and you're changing your email signature, right? It's a little bit more...
I didn't think it was quite that simple, but I hear you.
But it's a little bit more involved, and I don't know that we're stuck with permanently higher prices. But on the other side, you have the United States as having an ally or a Venezuela-type situation on the other side of the Straits of Hormuz. So this is wildly beneficial in the long run for the entire globe outside of, say, China, who gets half their oil through there.
So, Dagan, you mentioned, I think it was in the first hour, you mentioned the issue here is not the supply of oil. It's the movement of oil. It's not about what you can make. It's about how you get it around the globe. I guess I wonder, and may Palantir's technology be as good as you say it is, and I don't doubt that.
Well, and Anthropic.
Or Anthropic, and you name...
That's the tech.
Yeah, okay, so all the AI they're throwing at it. My question is, Iran knows the Strait of Hormuz is their greatest point of leverage. As long as they've got a missile to fire, a drone to launch, or a mine to put in that body of water, I think they're going to try to sow discord and fear that way and hope they can outlast the American public when it comes to oil prices. Do you see that as a real risk, or do you think that the U.S. can put that to bed pretty quickly?
This is my opinion, and it's something that Chris Wright has talked about and the president has talked about. that it will, if you want oil and other commodities to be freely flowing in and out of the Strait of Hormuz, it will require military escorts. It will require a U.S. military presence in the region. Insurance provided, backstopped by the United States, doesn't go far enough. And I will note one thing, that it was something that Chris Wright was saying last week when he was asked about it on Fox and Friends, I believe it was. He said, I'm looking through my notes because I don't want to say here's what he said. That he was asked about it Thursday morning by Lawrence on Fox and Friends. He said, the full focus of our military assets is Iran. And he said, we need to suppress Iran's ability to wreak havoc and cause trouble for its neighbors. We must get Iran's ability to cause trouble way down. As soon as it's reasonable to do it, we will escort ships through the strait. So I do think that is, I don't want to say you're seeing the language change a little bit, but that's probably on the horizon. One thing that listening to Javier Blas at Bloomberg, he pointed out that these oil producers in the Persian Gulf region have been planning for this type of event for 4 decades. That's why 45 years ago, Saudi Arabia built the East-West pipeline to the Red Sea. The UAE built the pipeline, that the Saudi pipeline, 5 million barrels a day. UAE carries 1.5 million barrels a day, that to circumvent what would otherwise have to pass through the Strait of Hormuz. That's 6.5 million barrels a day. Roughly 15 million barrels normally goes through the Strait of Hormuz. That is enough of an offset, coupled with a petroleum release from a global reserve or even from the U.S. on the margin, to calm the markets and give the president in the United States more time. But when I said it's about a week or a week and a half, that's about how much time before you start to see the markets reacting again. Again, higher prices is demand destruction to try and bring supply and demand back in balance if oil stays off the market.
Let me throw you a little bit of a curveball, maybe, Taylor. Go where you want to. I think it's interesting that the president emphasized seizing the Strait of Hormuz, okay? That could mean many different things, but I wonder how is that the kind of language and move that could calm markets, or is that the kind of thing that gets, maybe it gets the right people on edge? I don't know. What do you think?
Well, I don't know. We have a headline that says a super tanker sailing through the Strait of Hormuz with 2 million barrels of oil. Now, that's Iranian oil, but again, they're starting to see some flow through there, which is good. I think what is interesting, when you say seize the strait, I think normally people would be like, no way, what is that? That's more conflict. I have been totally surprised by the calmness and the resilience of the markets. Some great analysis, and this is a big if, so I'm not saying that I agree with this opinion, but the analysis shows if you get $100 a barrel of oil through this year and then through 2027, you start to get some big demand destruction. You get a big increase of 0.7% of headline inflation, a 0.1% increase in unemployment, a negative 0.1% drop in real GDP. But that's if oil stays at 100 through this year, and some of next year. And we're down 15% on the day to below 85 a barrel on oil. So even if you get it hovering at 65, 70 for a couple weeks or a couple months, you're going to see maybe a little bit of an intake, some analysis says, in the first quarter of 2026. But then you get pretty much a resumption to normality by the second quarter. So I think I've been totally impressed by the markets, the equity markets, to take this in stride. I think, look, I know, Brian, that some of this data is a little bit outdated, but we came into this conflict on much stronger footing than, let's say, we went into 2022 when oil tops 100, right? Bank of America comes out and they said the year-over-year increase in the growth rate in terms of inflows into credit cards and checking accounts, it's up 3.2% year-over-year. That's the highest going back in 3 years. They're starting to see come down of the big K-shaped economy. And so you are seeing, do you have breaking news you want to step in on?
No, it's just
I just
way down.
I'm just looking at the oil price.
Yes, it's down back.
Just will you put
I'm
the current
telling
oil
you,
price
it's down
back up there?
15%. It's incredible.
I mean,
You're below 85 a barrel. And
Yes.
so I
Oil
do think you're seeing just calmness in these markets that I just would not have expected.
We're at $80 a barrel.
Yeah.
And you've got the discount to Brent,
Yeah.
which was in place. It's not as steep as it was, but it's back in place as it should be. Just one quick thing. The inflation-adjusted price of oil since we went into Iraq has been, we have not gotten back to the prices of the 90s and prior. That the inflation-adjusted price of crude oil has been elevated ever since we went into Iraq. And this is this is based on prices in the middle of last year. The inflation-adjusted price since 2000 of crude oil is close to $80 a barrel. But if you go back to the beginning of 1980, it's only it's closer to 70, it's 71.
Okay.
So that added a permanent risk premium to the cost of crude. One of the reasons that you will see not so nasty a reaction in the cost of crude when the United States takes on the Iranian regime.
Got it. Jerry, just real quickly, $80 a barrel. We were fretting about
Let's go,
119.
baby.
I mean,
Yeah.
your just quick
Just
thought on
quickly, I just want to say one thing
Yeah.
super fast,
Yep.
which is there's going to be huge and continuing, and already is, pressure to get out, to leave, to end, which I don't necessarily support. But here's what Senator Elizabeth Warren had to say today. No money for Americans losing their health care, but there's $1 billion a day for this war. So that's what the Republicans are going to face. They're under incredible pressure to make things happen. They've already done a great job, but let me tell you, it's going to get tougher, not easier.
Okay, Elizabeth Warren making her second appearance in this show.
Can I,
Two more than I like to give normally.
the Fugazi Sacagawea. That's what she is.
That is one
Sorry.
way to potentially frame some of her past comments.
I think we need